We've got Andrew Freris as well joining in, as well as Jahangir Aziz to assess the situation. And the headlines day by day continue to get more frightening. Andrew, I would like to begin with you. It seems now that it's a given that we are going to see a global recession play out, given the spread of this pandemic across the globe.
You mean if we're going to have a global recession, meaning that we're going to see negative GDP growth right across practically every country? The answer is no, we won't, because, for example, China is not going to grow negatively for the year. So I'm being a little bit pedantic because, we use the word recession without really defining what we mean. Different countries are going to have different experiences. Point number one. Point number two, if this is a real recession, in other words, it is a real crisis concerning the real economy. The banking system across the world are perfectly sound. In other words, this is not a financial crisis. I don't know why somehow it has been read as a financial crisis. It is simply the financial system reacting to what they consider to be a very poor physical, real economic outlook. So monetary policies that simply pump more liquidity in the market simply treat symptoms and not the causes, completely pointless, in fact, utterly useless. So the way perhaps to go around this is to make quite sure that the dollars do not go into the financial system, but go into people's pockets. I'm afraid I have an unbelievably stupid suggestion. I'm saying that, read my lips, stupid suggestion, but in a sense, it makes some kind of a sense. Tell me, what's the point, as the Fed did, to put into the Treasury bill market 1.3 trillion, that's 1,300 billion US dollars, last week? This is going into the assets of either fund managers or the banks. What you need is 1.3 trillion going into people's pockets. United States has got a population of about 330 million people. Good. The Fed gives every person in the States 1,000 US dollars over the next 3 months. That is 1.3 billion. What's the impact this is going to have in the economy? All the policies that have been taken so far, as far as monetary policies are concerned, might be good for sentiment, but do absolutely nothing for the real economy.
Yeah. Jahangir Aziz, morning. We want to get you in on the discussion as well. We know the problem. We don't know how long it's going to last, and we don't know the repercussions of it. At this point in time, whatever central bankers are doing doesn't quite seem to be working out. Case in point being Fed, and look what happened to the markets. What could be a possible solution? What could central bankers do at this juncture to try and arrest the catastrophe that the economy is going to face in months to come?
Look, the first place, this is not a monetary policy crisis. This is something that requires public health systems to be used as the solution, and governments to step up with a lot of fiscal support. So I think, the idea that, monetary policy is going to stop the virus from spreading, clearly that's not going to work. To the extent to which monetary policy works is if it simply mitigates or cushions the blow while the economy is adjusting to the containment, to the spread of the virus, to the fact that social distancing is essentially going to stop a significant amount of services sector activity in the coming months. It will also spill over into industry. But it cushions the blow. It cushions the blow in the sense that it does not force reasonably healthy companies to be forced into bankruptcy or to be forced to close down simply because the cost of working capital or the cost of carrying on the business is too high. So it mitigates that cushioning to some extent. But ultimately, it has to be something where the government has to use public health policy to stop this crisis, the spread of the virus. And, we do have a template, and that template is China, that if you lock down the economy for 90% of the economy, for a 2 or 3 week period, you can actually stem the spread of the virus. And as we've seen in China, activity had a massive shock as the numbers came out yesterday, a massive decline in activity. So first quarter is going to be an unprecedented decline in Chinese growth. But all of that means that they have the situation under reasonable control. And unless there is another outbreak of that from some other source, we should see a very strong recovery in the second quarter. However, the rest of the world isn't doing what China did, which is to put in place a very, very stringent containment policy right at the beginning. And consequently, the problem is going to be that this virus is being allowed to spread, will spread, and most likely will take a much longer time than what happens in China to go through, what an epidemic cycle usually takes.
Jahangir, Philippines has decided to shut their markets down. China has also decided to shut their markets down when the virus broke out initially. Does it call for global financial regulators coming together and deciding to shut the market down for a week or so? Because the way things are going, it's going to have such a large impact on financial markets and the health of the financial market that the recovery is going to be very, very damaging.
Right, but the point is that if you shut the market down for 2 weeks, when the market opens, what will it react to? If in that 2 week time, even if we take the argument to its logical extent, in that 2 week time, if public health systems are not stepped up, if the government does not come up with significant amount of fiscal support to support not only to cushion the blow during this adjustment period, as the virus keeps spreading, but also promises to make the recovery much stronger. The market opens 2 weeks later, and then what happens? It faces the same or the worst reality. The problem is that governments, this is a global problem, and we are all looking for local solutions to a global problem. We really cannot solve a global problem with local solutions. This requires a coordinated public health response coming from all the governments in the world, and that, unfortunately, is still lacking. It's almost like, Chinese, containment provided the world with almost 6 weeks of lead time. And essentially, that 6 weeks of lead time wasn't used at all by any of the governments in the rest of the world.
Andrew, closing comments, really from you. Andrew, how does one keep calm in this kind of a market? We can endlessly talk about unprecedented times, the impact of virus, recession, slowdown. But when you see portfolios and asset, depreciation, how does one keep calm? I mean, what do you tell yourself?
Well, I tell myself it's three things. Is to carry on emphasizing that an epidemic is a disruption, not a distraction of the economy. It is a disruption. The moment the disruption stops, the jump back will be very significant and very fast because the physical capital of the economy hasn't been damaged. And I'm sorry, this sounds unbelievably inhuman, but in a world population of several billion, 10 or 20 or 30,000 deaths, particularly if these of older people, has zero impact on the labor force. It has a massive impact on the people that are relatives and beloved, but I'm afraid economically it makes no difference whatsoever. So point number one is I carry on saying to myself, this is a disruption, not a distraction. The second point, of course, it is the worst possible time to sell, and also to look at the portfolio and decide that this is the end of the world, because these have been extreme reactions to an extreme situation. It's very easy to blame people that are panicky. When you don't know what you're dealing with, then the first reaction, of course, is to sell. And the third point is to carry on looking at the economies that they were doing better than other economies when the tsunami hit, because potentially they're going to have a much stronger capacity to recover. So these are the three things that I carry on telling myself.
Thank you so much, Jahangir, as well as Andrew, for joining in and giving us your take.